The BRICS are definitely going on a gold standard. For the West, this means one thing. If a Western nation wants to trade with BRICS for certain goods, it needs more gold. If the West does not wish to trade with the BRICS for those items, then they must onshore, friendshore, reshore their supply chain sufficiently in natural resources otherwise provided by the BRICS to obviate the need for both the BRICS resources and gold.
Welcome to the Morning Markets and Metals with Vince Lanci, where each day he brings you the precious metals and financial news to get you ready for your day. And now, here's Vince.
Good morning, everyone. I'm Vince Lanci, and in today's market rundown, we're going to discuss the BRICS plan to dominate their regional trade for commodities, as the title implies. Then we're going to, I'm going to declare the petrodollar dead and give you a reason for it. It's already dead. It's been dead for years. We just didn't realize it yet. Anyway, let's run down the markets, which, by the way, interesting development in gold. Observable, I think, anyway. All right. That must be annoying seeing that cursor. The dollar is 105.58, down 6. 10-year yields are 427, down 2. The S&P 500 is 55.88, up 10 handles. The VIX is 1243, offered unchanged. Gold is 23.75, up 1242 on the highs of the evening. Silver is 31.02, up 22 cents. Copper is 459, up a little under a penny. WTI is down 55 cents at 81.39. WTI is off the highs. Hard to say. Natural gas, 230, up a penny. Bitcoin, 58,525, responding well to the, end of Germany's selling, but nothing crazy. Ethereum up 33, 1% at 3,099. Smells of short covering, taking profits after trades. Platinum, palladium, both under 1,000. Palladium down 991, platinum 996 and change, up 11, up 15, respectively. Grains are unchanged. Soybean is 11.40, up a penny. Corn is 3.85, down about a penny. And wheat is, wheat's a little bit offered. Wheat's down 3 cents at 5.71. The grains are just moving based on investment flows right now, not seasonality, it seems. All right, go right to gold. This is an update. It's tentative. All right, so we go to the daily. All right, you know the drill. Here's the buyer. Here's where the buyer came in at a higher level and then got filled, and then it got offered here. A little bit of a spike, and now you've got selling. And this is key. I believe this buyer is big, and this buyer, on occasion, who comes in, is not big or as big. Let's put it that way. And then we had 1, 2, 3 days of doji. And by the way, I kind of consider this together as a doji day as well. So the market basically hung out here for 5 days. And then it popped. And it popped on the 3rd. And then the 4th, no activity. The 5th, the 8th, cancels the 5th out. Here's what I'm getting at. These 2 days here were macro discretionary coming into buy. Okay, for whatever reason. We've gone through this before. On this day, when it was closed, they were waiting. The market opened, they bought. The market came down after this high, and it stopped again. It stopped at this area. Look at this. 1, 2, 3 wicks here. I drew it back to there, but it's kind of arbitrary. I think this is macro discretionary buying. that haven't gotten filled in this area. So we've got more buying coming in. We're definitely in an uptrend. These hiccups are just hiccups now. So if you want to draw a trend line, you would draw a trend line from here to here. And that's what I think is going on. Do I think it'll hold the next time it goes down here? No, I never do. But we're not down there yet. So I'm pretty comfortable with that. I think this buyer is back. I think this buyer is real. And I think we may have a buyer in here now that's unfilled. Bottom line is I think between here and here, that's macro discretionary buying. And I think here, that's a sovereign wealth fund or a central bank. That's what's going on. Silver, better performance. Those lines don't mean anything. Even better performance. Here's your macro discretionary buying, right? Here they are buying again. And on the sell-off on the retracement, never even got to that level. So these guys are buying. People want the metal. They really do. Anyway, sounded more interesting in my head, but you get it. All right, the BRICS will pursue a gold standard. Here we go. Front page. There's the story that this is based on. The BRICS will pursue, will use a gold standard. I put together information that I received in different parts of the world, Russia, news agencies, and trying to piece together a legitimate narrative on what's really going on. There's a Founders version of that. And there's something that I wrote in 2022 when I changed my mind and thought silver could be remonetized again. I think that's unlocked. Let's see. No, that's not unlocked. I thought I unlocked that. Oh, I unlocked this. Here's the information going back to July of 23, the first time we discussed the unit, which I had to reference coming back to this. Anyway, let's go to the main story. Here's an excerpt of the post that I just put up. The BRICS initiative aims to reshape the global economy, challenging the dominance of the US dollar established since the Bretton Woods Conference. The BRICS are, this is me talking now, the BRICS are definitely going on a gold standard. For the West, this means one thing. If a Western nation wants to trade with BRICS for certain goods, it needs more gold. The key term is wants. Okay? If the West does not wish to trade with the BRICS for those items, then they must onshore, friendshore, reshore their supply chain sufficiently in natural resources otherwise provided by the BRICS to obviate the need for both the BRICS resources and gold. So since COVID, which is looking very suspiciously like a completely orchestrated takedown, since COVID, the East said you can't have access to our resources or our labor or our side of the supply chains. The West said you can't have access to our payment chains, which is the money part of the supply chain, or our value-added part of the supply chains. Fine. That's the divorce. The East says, fine, we'll build our own payment chain, our own replacement for SWIFT, and we'll use our own labor. And the West says, fine, you can't use our technology and you can't use our SWIFT to do dollar deals. And that's the divorce. The supply chains are cut in half, right down the middle of wherever we are geographically. The West says we need someone else to buy our bonds, and we're still looking. The East says we need something to replace U.S. bonds as a store of value. We need something to replace the dollar as a currency. Okay? So that's what's going on. If thinking about the West here, if the U.S. does not onshore, start drilling for oil domestically, start mining its own lithium, start pulling its own silver out of the ground. If we don't, then we're dependent on their resources. And if we're dependent on their resources, then we've got to negotiate on their terms. And they want gold. They don't want treasuries. And we get into what the East has to do some other time. But the alternative is either you buy more gold and silver to the extent that you want to deal with the BRICS for their own other natural resources, or you develop your own. So either you grow organically or you grow by accretion. That's it. Therefore, the U.S. must, as I just said, The U.S. must rebuild supply chains to remain self-sufficient in certain commodities, or it must trade with the BRICS on the BRICS terms. The BRICS, touching on what they have to do, must build payment chains and value-added portions of supply chains to replace the SWIFT system. Now, why is this picture there? Well, because that's what's going on. The BRICS don't need the West. They need the West technology. They need the West network. And that's why the BIS and the BRICS are partnering. The BIS is a bank, and the bank wants to be involved where the money is. All right, so here's the table of contents: the currency, the unit and technology, the BIS role, the G7 problem solved, the store of value, the BRICS challenge to US dollar hegemony, however you say it, who cares? The three-phase plan, the end of dollar dependency, the national approach to internationalism, and then related topics. I'm going to read a little bit of this for you. Now, this is a line from each of the sections, right? The currency. What is the currency? The BRICS are in the process of creating a settlement medium of exchange for international trade comprised of gold and other assets deemed separable from dollar influence. The unit and technology. The combination of unit type pro rata measurements. There's going to be this much gold in it. It's going to be unrehypothecatable. You can't have double claims on it. And we're going to use blockchain and current accounting economics. They will solidify the currency standards, right? You're creating standards for the currency, what backs the currency, and using technology to enforce it, right? So the combination of unit type pro rata measurements, blockchain type security, and current accounting economics, it is believed will serve to solidify the nation currency's denomination, reliability, and value. The BIS role. It is believed the West's G7 will participate in this BRICS trade. If political expediency and image is a problem at first, you don't want your people mad at you, then they will use the BIS and or commercial banks across international lines. Hence the expression merchant bank, which is part of mercantilism. 4, the G7 problem solved with gold and silver. The G7 banks and sovereign wealth funds will simply continue to accumulate the assets within the store of value basket the BRICS created. What does that mean? It means that the West can't own the BRICS currency because it looks bad. Let's pretend, right? But the West can own the assets that are in the currency, in the basket. It's going to reverse engineer it. The store of value. The basket of assets will serve as the store of value for most trusted for trade between participating countries. And that's a dynamic situation. It's apparently going to be 40% gold and then a mix of other countries' currencies, while other countries' currencies are probably going to be soft or hard backed with gold so that they can get preferential treatment within the basket. It's a competition. And silver benefits. That's another conversation. The three-phase plan. This is information I got from other things that I have read and researched. They will adopt a gold standard. Now, you can argue about what a gold standard is. Your gold standard, my gold standard, convertibility, exchangeability. There's going to be a gold standard. Okay. Will it be for everyone? No. Will it be for them? For the inside circle? Yeah. Will it be exchangeable, convertible? Yeah, for them. And will it be used for trade? Yeah. So it's going to be a gold standard. 40% of their trade will be backed by gold if they execute what they say that they're going to do. Okay. Second phase, create a unified payment system with advanced technologies. Sounds like business speak, but basically that's their blockchain product, and promoting central bank digital currencies, CBDCs. That's the evil part. Well, in my mind, it's evil. They're going to use central bank digital currencies as their respective fiats in the basket, not in the basket, for transacting trade. So basically, they're going to use CBDCs as a unit of accounting, as the contract saying this much gold, that much gold, this much gold, that much gold. That's the currency. Okay. Will that be the currency that their people use? No, but their people will probably end up having access to a version of that currency, which I don't believe will have gold and silver in it. But That's another conversation. The end of dollar dependency, the national approach to internationalism. It's kind of funny, just a little editorial comment. It's kind of funny that uh, the World Economic Forum and the whole kumbaya, wokest approach to global peace, which has been the dominant philosophy since World War II, for good reason in many instances, towards removing national divisions to create internationalism. Well, if you want internationalism, you have to have nations. And this is the national approach to internationalism. That's what the BRICS are doing. Kind of like a rat pack of countries, if you're old enough to know what that is. All right. There's the whole story. There's two versions. We go through everything in detail of what we know, tying together the unit, the BRICS intentions, the BRICS goals, some problems that they're going to have along the way, and the ideas behind it. So there you go. Now, the petrodollar. There's a story on Zero Hedge. The petrodollar is dead. It's already dead. Okay. The divorce is done. They're just papering it over. If you're in business, there's an expression called papering it over. I've closed on the mortgage. We're just papering it over. They're just signing the documents. Okay. The petrodollar is already dead. And here's what made me think that. I read a post by Zero Hedge. And sorry, I had a little bit of a interruption there. In April 2016, Saudi Arabia threatened Obama it would sell its $750 billion in U.S. treasuries if it were held responsible for September 11th. That's via the New York Times. It won. We didn't accuse them. In early 2024, Saudi Arabia threatened the G7 it would dump tens of billions of European bonds if $300 billion in Russian assets were seized. Bloomberg. It won. The petrodollar's already dead. Okay. We're in the process of separating it. And here's the thing. The Saudi Arabians sold half of their holdings anyway. So it's not that they're selling. It's that, and we know they're selling. It's that they're going to sell quicker if we don't do what they want. The petrodollar is dead. The BRICS are in charge of this, specifically Saudi Arabia. But there's a deal here. And the deal is we won't dump our treasuries if you don't dump your oil. Right? They depend on oil to make money. We depend on treasuries to finance our deficit. So each time one of us gets a little bit out of hand, the other puts us in our place. And that's what's happening here. Okay? The petrodollar is dead. Gold's up 14 while we talk about it. Market news, some really interesting things in there, but we don't have time to go through that today. You can take a look at it yourself. Today, Powell testimony in front of the House. Expect more of the same. Yesterday's testimony was constructive for markets, worried about inflation, not that worried anymore, and gave signs that he would be easing still without being obnoxious about it. Gold is up 14 and change now. Silver is up 25. Yes, silver is lagging behind. Try not to look at the day-to-day lags, silver and gold, because now we're looking at week to week. When silver gets oversold relative to gold, someone comes in and buys it. When silver gets overbought relative to gold, someone comes in and sells it. And that's what's going on here. Silver and gold are in tandem right now and moving together, as Michael Oliver noted before. Anyway, I'm Vince. Have a great day.
Well, thanks for tuning into today's Markets and Metals with Vince Lanci. The show is brought to you each day by Miles Franklin Precious Metals, who we encourage you to consider for your next gold or silver purchase or sale. Miles Franklin has pricing that's among the best in the industry on most products, and Arcadia is proud to be a licensed Miles Franklin representative and happy to help whenever you have questions or want to place an order. Where this week's specials include 2024 Silver Eagles from the U.S. Mint for only $5.95 over spot, and 2024 1/10 ounce Gold Eagles for only $39 over melt. And of course, you can find out more by calling us at 833-326-4653 or emailing arcadia@milesfranklin.com. Happy to answer any questions you have, give you pricing on other products, and help you get set up with whatever you need. So thanks as always for tuning in, and we'll see you again tomorrow. Please note that this video is not intended as legal licensed financial trading advice and is to be used for informational purposes only. Please contact your financial advisor before making any decisions, and thanks for watching.